Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, June 15th, Thursday. Today we got retail sales month over month for May. We got 0.3%. We were expecting negative for retail sales to continue showing that the consumer spending, the consumer is slowing down, but no, we got 0.3, excluding autos 0.1. And we got also jobless claims. The initial jobless claims came the same as the previous one. And we were expecting slightly lower, and continued jobless claims, we were also expecting slightly lower, and we got a little bit higher for jobless claims. And basically today is showing that retail sales is still strong and jobless claims are going higher. That's a mixed economic data readings. Industrial production still in the positive year over year, but month over month is showing signs of cooling down. Manufacturing production 0.1. So basically, retail sales going strong, production cooling down, and jobless claims going higher, showing signs of perhaps the labor market is not as tight as before. And this is all after yesterday's big PPI in the negative and FOMC interest rate decision that was basically a skip from the Fed. I would like to basically do a quick recap of the most important things that Jerome Powell said yesterday. So let me first say that market expectations they nailed the skip. From time to time, markets are basically aligned with the Fed and with a 93% chance of a Fed pause. Basically, we got what markets were expecting. That's one side of the equation, that positive, meeting expectations. But the Federal Reserve unanimously decided against the 11 consecutive interest rate hike, but the language changed from determining the extent to which additional firming may be appropriate for future rate hikes to basically indicating that further hikes are to be expected. And that's when basically the markets sold off. If we check the Nasdaq and we go to yesterday's price action, when the interest rate decision was made public, we just sold off. We were waiting for Jerome Powell conference, and then Jerome Powell said, okay, let's not call a skip. We have to wait and see. And they are basically saying, we expect this year to do 2 more interest rate hikes. Despite growth expectations revised up for 2023, 24, and 25, so they are saying that growth will be increasing, the PCE inflation expectations were flat. So they are saying that inflation in terms of core PCE is still high, and they are not revising, they are keeping those projections flat. They revised down the unemployment rate expectations, so they are willing to accept that the unemployment will not be as high as they were expecting because the labor market is actually really tight. And the key takeaway here is that the Fed sees more hikes ahead. But look at what markets did yesterday. And if we check the interest rates for July, interest rates futures for July, we are at 5.1, so no change. If we see September, 5.25, that's the rate that we are right now, so no change. And if we check December, 5.20% right now. So basically, bonds market are saying, we call that a flap. That's not true. We don't trust the Fed. And despite the fact that bonds market are not pricing in interest rate cuts this year anymore, they are not buying the fact that Fed will raise rate 2 more times this year. So really be really careful with the kind of price action that we see. And on top of that, follow the bonds market and the interest rates futures, because from time to time we will see some adjustments. And the same way that bonds market, basically when they try to say after the bank's failures, they try to say we need support and we want to see more than 100 basis points of cuts in 2023. They corrected, and look at where we are right now. That doesn't mean that market is always correct, but there's still a misalignment between the Fed, what the Fed said yesterday, 2 more rate hikes, and what bonds market is pricing in. If we check the Fed Watch tool in order to see a little bit more information, we can see that analysts are not saying the same thing as the market. Right now for July, it's basically, we are at 525. So on July, the analysts are already saying with 67% of probability a new hike. And if we check, that would be the last hike that these analysts are pricing in. And then in December or early next year, they think that Fed will probably start cutting some rates. So we have the Fed saying 2 more rate hikes. We have economists and analysts saying 1 more hike in between July and September. 1 more hike of 25 basis points to reach the 525, 550. And then we have the markets that basically are saying that they don't expect the Fed to raise rates anytime this year. So 0 rate hikes this year. No cuts, but no hikes. So this is the kind of situation in which we are right now. Markets are still not trusting the Fed, despite the fact that they were wrong, pricing in a lot of cuts. They corrected, adjusted expectations, and right now they are calling again this misalignment with the Fed. So let's talk right now. Let's go to the charts. Look at Nasdaq. Nasdaq is continuing higher. 1, 2, 3, 4, 5, 6 days in a row in the green, putting a nice weekly candle in this quadruple witching week. And if we go to the 1-minute chart, slow time frames, let's first talk about the 30-minute to really see the context. It's really simple. We have this demand. We have yesterday's demand on the V reversal on this same support, 15,000, and also to SD support after FOMC. And then today's pre-market action was basically some kind of inventory adjustment, trying to short the market, but look at this. They went straight up, calling, basically taking out this yesterday's high, pre-market high, everything. And look at these bottoming tails. There's a lot of people still buying in. If we see the slower time frames, 1-minute chart, we can see that we are slowly grinding up. And right now, with the point of control up here, I really think this is a consequence of yesterday's, a lot of people really shorting this and getting a squeeze today. If we check the ES is actually doing more or less the same. They took yesterday's close, they took yesterday's high, and we are right now seeing, look at these green candles on the ES. This is getting some momentum. I think a lot of shorts are probably getting a squeeze today to the upside, and the ES is actually putting the same kind of moves that Nasdaq was doing at the beginning of the breakout of this consolidation around 13,400. That looks so far away, but the ES is right now really squishing. If we check the weekly, let's go to the continued chart. Look at this. I don't discard, I mean, anything could happen. And if we want to basically start pushing 4,500, Oh boy, that would be awesome, right? That would be insane. The Nasdaq is not in the same situation. It's already at this huge critical resistance. Look at this. Remember when we were right now down here at 10,000, almost 11,000? So basically we are now from not for the October bottom, just for the second pullback, we are right now 42%. Wow, look at that. So Nasdaq approaching this huge resistance. I don't think Nasdaq is going to push 16,000 anytime soon, but I mean, anything can happen. This is the weekly chart, but for sure the ES has some targets within reach. And within reach, when I say within reach, is just at 1.82%. That could be tomorrow, Friday, quadruple witching day, who knows? But talking about options, be really careful. Be really careful. Before moving into other markets, let's talk a little bit about options expirations, because I think most people underestimate this week, quadruple witching day. It's all the quadruple indices, options, stocks. All the 4 major options are expiring this Friday, tomorrow. And there's basically 5.6 million units. We are trading at 440 and the max pain is 415. I mean, we are way above max pain. A lot of these put walls are going to expire worthless. And I don't know about these 440, 73,000 units for 440. That can be something, but I think market is moving up because of this. But don't get me wrong, they still have tomorrow to really push the market down above 430. Tomorrow could be a red day and at the same time not pay any of these put walls. So adjust your expectations, because I think the margin, the ratios to the upside are, the potential to the upside is less than the potential of not paying these puts, but pulling back a bit in the both Nasdaq and the S&P's markets. But tomorrow is a good day, a big day. So don't ruin your week, but pay attention to this. Tomorrow I will provide also an update on this, but this is the week in which you have to really follow these kind of things. There's a lot of puts. I mean, there's no way we are going to 420, but 430, 440, in between these 10 points range, there might be some manipulation tomorrow. So take that into consideration. Other things. So we know that Apple, it's really strong. Let me put the daily. We know that Apple is at all-time highs. Welcome, guys. Welcome, bulls, because this was the all-time highs that was rejected, and today we broke again. The 1 minute chart provided, I think Apple went straight to that level. Look at this. The orange light is the all-time high. Apple went straight to that. They were holding, and it's basically that kind of strength that is supporting the Nasdaq today. That, coupled with the fact that Microsoft it's also doing the same, is not yet there, but it's again within reach. It's just at less than 1% of all-time highs. So both Apple and Microsoft, the two biggest stocks of the entire market, are pushing all-time highs. So that's why we are seeing some of these squeezes, because I think a lot of people took some of the profits up here, but that doesn't mean that just psychologically some of the traders just want all-time high tradings. It's just as simple as that. So Microsoft, Apple pushing, Tesla is not having a good day despite the fact it's in the green, because if we check the 15-minute chart, we can see that since yesterday it's just been absolutely demolished. But since the open, we got a really nice move, 3% today, but it's hidden by the fact that we were gapping way lower. Amazon is also in the red, so XLY, consumer discretionary, is feeling a little bit of pain. It's still in the green. But look at this. We are trying to break this consolidation after the move. So Amazon is also pushing. Tesla is pushing after the open, despite that being red. Microsoft, Apple, a lot of strength. Nvidia did push yesterday, so they already said they blew up these all-time highs, and we are holding that level. 420, it's a lot of memes for that 420 level price. But I mean, today is super choppy for Nvidia, but Meta is also pushing. Also pushing this overhead huge gap that we got on earnings February 22. And we got this, we entered this gap at 260. We bounce off that, and we are still pushing and pushing and pushing. It's not the same strength that we are seeing Apple at all-time highs and Microsoft pushing all-time highs levels. But Meta is also worth mentioning because this is just, look at this. If we see since, not even since the bottom, just from this, it's 160%, guys. It's just insane, the kind of moves that we are seeing on these huge market caps on the Nasdaq. Unbelievable. So let's talk about banks, because KRE is 1%, still not showing this huge recovery. But still, financials in the green is something that you want to see. XLF, you want to see it ripping higher, because you want financials and banking sector to follow the bullish market. What else? We need to talk about dollar. Dollar was kind of trying to do some things here. They failed, so this pivot is no longer there. It's quite, I was expecting this kind of move. If you can check my previous videos, I was waiting for 105, but because of this hype that maybe the Fed will not raise interest rates anymore, is just destroying the dollar and pushing gold. Gold doesn't look too interesting on the daily, but if we check the 1 minute chart, look at this. 1.61%, or more than that. 1.70%. 1.70%. So not, they just sold off yesterday after FOMC, but they digested something, and I think there's a lot of demand for gold. Gold is anti-inflationary, so they are moving out of dollar and putting a lot of pressure into gold. And I mean, I'm watching this consolidation. Everyone is watching this. And this kind of bottoming tail of the previous, now putting a double bottom, I mean, we need to see this, because a break of this level, let me put it up here, a break of 1,995 and recovering 2,000 might lead to a big move on gold, showing nice support, nice demand down here. Copper is also in the green, and it's now showing the kind of thing that I was expecting at these levels, but they just took every support. First leg down, consolidation, second leg down into support from 1 year ago, and then recovering, breaking descending resistance, and now trying to push 3.9 on copper. This is really good, because Dr. Copper shows really the strength of the worldwide economy, and seeing this actually makes this bullish run more strong than ever. We want metals to follow, we want gold, we want financials. Silver, also metal, is denying this bear flag. Look at this. It's really denying the second leg down. I was expecting that, but looks like market participants want something different. So another big bottoming tail showing demand. We be really pay attention to these kind of things in other markets, because these kind of alignments show a strong case of bullish markets in the upcoming weeks. Who knows? But after this week options predictions, we really need to pay attention to this kind of contexts in other markets. We talk about dollar, yields, metals, Nasdaq, tech, sectors, banks. Let's end the video with small caps. Small caps are consolidating up here. I still think they have steam, they have fuel to continue higher to 191. Yesterday they got crashed, and into the after hours and pre-market they were just trying to hold some things, but Russell is trying to hold. It's looking at least higher highs into this huge ascending triangle, but we need small caps. Let's talk about the overall market. The equal weighted ETF still showing this nice push. And how about breadth? Well, breadth, the percentage of stocks above the 200-day moving average is not improving. It's actually retracing a little bit, minus 2.50%. We want this to hold 50 and perhaps continue higher. We want small caps, we want financials, we want gold to all move up, and we want dollar, yields, and we want defensive sectors like utilities, staples, and healthcare to go down. That's the ideal situation in order to trust this new bull market against all fundamentals, because we need to really analyze these kind of things to really not see only one or two stocks, not see only the Nasdaq or the ES. We need to see other markets to really find convergences. And right now, let me tell you, Nasdaq is pushing higher. It's looking strong, and it's basically squeezing yesterday's shorts. As I was mentioning earlier, I think this is squeeze. I will check tomorrow the open interest on the Nasdaq and the ES to see if there's new money coming into the market, but this looks quite good for at least retake high of day and push higher into the afternoon. So congratulations, bulls, because after yesterday, market was quite shocked and quite disappointed, but they are not trusting the Fed. They are doing their own way. And sometimes that can lead to good things, because they were pricing in this skip that the Fed confirmed yesterday. But some other times that could lead to expectations don't being met. And this time, if in July we see a hike, as some analysts are already trying to predict, markets will really feel the pain. So there's still some bull opportunities, but be really careful of that, because markets are pricing in something different than the Fed, and just be careful and take that into account. So thank you for that. Thank you for your time today, and if you enjoyed this video, just support the channel, support the video, give it a like, subscribe to the channel, and remember that I upload new videos every single day. New high of day for the Nasdaq. Let's see the S&Ps. New high of day for the S&P. So they continue higher, squeezing higher and higher. So remember that we have still a lot of hours into the afternoon, into power hour, to really see some momentum, but don't get greedy. Take your profits up here. Is just the best thing to do. Discipline, risk management, and patience really pays off. Thank you for your time, and I hope you had a good day, and let's talk tomorrow on the huge options experiences day, Friday. Don't ruin your day tomorrow, but for sure, be patient and wait for those opportunities. There will be plenty of opportunities tomorrow to make some profits. Thank you, everyone. Stay safe and see you tomorrow.